reason why people lose so much money in the markets is because they don't know how to time their entries and their exits. Knowing when to get in and when to get out, not getting in too soon and not getting in too late, is going to dramatically increase the amount of profits you can make when you're day trading. So with what I'm going to show you in this video, it's going to allow you to time the markets a lot better, and you're going to make a lot more money when you're trading. So what I'm going to do is I'm going to show you my exact strategy on how I'm able to time the markets almost every single time. And I'm going to show you the exact tools that I'm using to help me do that on a daily basis. So if you like that idea and you want to watch this video, all you got to do, hit that like button, subscribe. Let's get into the video. Actually, before we start the video, we have an amazing community. So if you're actually a new trader and you want to join a community where you can learn, share trading ideas, and all that good stuff, I'm gonna leave a link down in the description down below. It's completely free to join, so go ahead and do that. Also, make sure you watch this video entirely from start to finish, because everything is gonna be in order. So if you skip the first parts, you're not gonna understand the last parts. So make sure you watch it entirely, all the way from A to Z. Let's go. Okay, so right now we are looking at gold futures on the 4-hour time frame, so I can show you guys my strategy on how I trade and find the perfect entries and exits. Now, what the majority of people do is they wait until the price starts going down or starts going up, and then they hop on that trade expecting more buy pressure. So for example, over here, you would see that the price is falling, but you haven't really entered yet, and you decide to enter right over here, for example. So you decide to enter over here, but then the price goes down a little bit, then shoots back up. You entered that trade way too late and did not take effect into consideration that there is supply and demand areas in the markets that we need to understand and use those to our advantages. Okay, so the first thing that I want you guys to do whenever you start charting any chart, and I'm telling you this works for any time frame and any market. So you can be on the 1 minute, 5 minute, 6 hour time frame, doesn't really matter, and you can be on any market. So forex, crypto, stocks, again, doesn't matter. What you need to do is you need to do this every single time you look at a chart. You want to start to understand the supply and demand levels inside of the market, and then you want to use those to your advantage. So how do we determine supply and demand levels? Well, that's actually extremely easy and just comes down to market psychology. We want to see and think like the traders before us so we can think like them again in the future. So what do I mean by that? Let me show you. So over here, we're looking at, again, the gold futures chart on the 4-hour time frame. We can see very clearly, guys, that every single time that the price has hit this level right here, the price has eventually started to fall, right? So we can see the price came up here, hit this area, price fell. Came up here again, hit this area, price fell. Did it again and again, guys. This is very important to understand the concepts of supply and demand. So this right here would be a very strong supply level. Now over here, if we go back and we take a look at this area, we can very clearly see, guys, that this here is a strong area of demand. People are buying in this area. The price came down, went back up, came back down, went back up. Again, happened here, and eventually this demand broke. There was a lot of sellers at that time. It broke it and then went back up, and then it broke it again, but it turned into demand again, because we can see the price broke the box, came back down and retested this demand level before being able to say now there's a lot of buy pressure, and the price started shooting back up. And again, you can see how the price reacted to this box over here with the insane amount of buy and sell pressure that happened in this little area. This is what we want to identify in the market. We want to identify areas of supply and demand. This is very important to do. But now we need to understand, when do we get in and get out of the market? In order to do that, we got to understand candles a little bit. So in order to understand candles, I want to explain something very clearly. And honestly, it's extremely easy, and a lot of people don't really realize this, but the size of the candle matters a lot when it comes to trading the charts. The bigger the candle, the bigger pressure it has, the more buyers, the more sellers inside that area. So for example, let's just say we are looking right here on the chart and we're looking at this candle right here. So we see very clearly, guys, the price was going up, right? And then we got a big red candle. Now we can see that this big red candle is actually bigger than the last two green candles combined. This is called an engulfing candle. And what these signify is a lot of downside pressure. There's a lot of sellers in that candle right here. So what happens when everybody starts selling? You can expect the price to start going down, right? If everyone's buying at one time, you can expect the price of something to start going up, because a lot of people are getting in and there's not enough of that product to go around, so the price starts going up. Very, very basic supply and demand, and that's how it works. So over here we can see that the price came back up very close to our supply level, And we can see that the last time also there's a mini supply level in this area. So if we were to use a rectangle, we see there's a mini supply level in this area because how the price was reacting earlier. So it came up to this level. We got a very bearish signal. The price started going down before getting into the demand, before it go back up and eventually breaking that. But we could have taken this trade over here at this big candle because we would have knew that there is a lot of downside pressure in this market. So understanding supply and demand is actually very, very important when it comes to trading, guys. Next, I want to talk about the tools that I use that help me time better entries in the markets. So for the tool I use one indicator. The indicator is called Elite Algo. So when you turn this on, this is what it looks like. It gives you these buy and sell signals directly on your charts, and these are our entry signals. Now the cool thing about this is that it will also give you supply and demand levels relative to where you are on the chart currently. So you can use that as well in your trades, but it has a bunch of different features. But for now, let's go and turn off the supply and demand levels inside of this algorithm. So we'll turn off the order blocks, press OK. And we can see very clearly, guys, that we could have waited until the price came back up into these levels and then taken these sells. And for over here, we could have waited until the price goes back down into these levels and taking these buys. And these would have all been winning trades, guys. We can see. So for example, we got the signal right here. We'd enter right after this big bearish candle that was already previously red, but changed colors because of the algorithm. And we can see that we had red candles the entire way. So we could have taken that trade all the way, guys. And we would have exited right here when it said buy, or we could have exited at any one of these X symbols that we see right here, where the algo is telling you there could be a possible reversal in that area. So that's pretty much how I trade. I use an indicator and then I use supply and demand levels to show you exactly when you should get in and when you should get out. I'll show you guys a few examples of this on different charts so you guys can understand it perfectly. Okay, so right now we are looking at Tesla on the 4-hour time frame, and I want you guys to just understand and analyze this market previously. So let's just pretend, right? Let's pretend this whole area here doesn't exist yet. Okay, so we're just gonna draw a box here, and we're gonna pretend that this whole area does not exist. Okay, and we only have this information right here to work with. Well, we can clearly see that over here we have an area of supply, right? And if we want to make it even a little bigger, we have an area of supply right here. This is a little more accurate. We have an area of supply up here. Okay. We have an area of demand over here. Why do we have an area of demand over here? Because you see the price came back down, went back up, and then came back down here again, went back up, down here again. And we can see that, right? The price started going back up after it hit this area. And then we have an area of demand right down here, guys. Okay. Now, understanding this, now we can start to understand what's going to happen over here. This is very, very simple. So now what we can do is we can just extend these lines. Okay. We extend them all the way. And we can start to understand, okay, what's going to happen around these areas over here. So now we can take off the box and we turn on the algorithm and we can see, okay, so the price hit this area and started going back up. Eventually, we created more of a supply area up here. So we can start drawing this. But we can see our previous demand area over here. This could have been taken as a really good signal and we could have made a lot of money on this trade. And then we can see that after it formed this high over here, this high cannot become a supply area. So we just wait until the price goes back up the area. And then we can take another sell, once soon as the algorithm tells us to sell, into our demand areas. And we can see that we have a demand area right here. So we can expect the price to bounce back up. So we'd exit around here. Then the price again went back up. Didn't go that high, but it gave us a sell signal eventually. And then the price came back down. And now we can see that it's starting to struggle around this demand area. So this is when we can take our profit and get out of the trade with this indicator and with this strategy. Let me show you guys one more example. So here's one more example, guys. Let's pretend that this area right here does not exist. We haven't gotten to this area yet, okay? So this area does not exist. Now, we can see that the price has been going up here, right? We are in a very, very strong uptrend. But we will still want to try to find the supply and demand levels on this chart. So what do? We just look for areas where the price touched and went back up. So for example, here would be a very good demand area. Keep looking, guys. We can see over here another good demand area around this level. Again, we see this because the price came back down, up, came back down, up, came back down, up, right? Very, very simple. And then over here, we can see we have another demand area around this right here. Very, very simple, right? These are our demand areas in an upwards trend. And then we can set our resistance if we want. We can see that there wasn't really any strong areas where the price went back up and then couldn't really break the next time. So right now we don't really have any strong resistances right now currently. So next we can see the price came back up here, formed one high, came back down, went again, couldn't break it. Now we have a supply area up here. So for supply, we're just going to go with red. Okay, we see that. And now we can delete this because we're currently looking at it. So what do we want to do here? Again, turn on the algorithm. We see that the price came back down into our demand level and gave us this buy signal right here. This would have been a very good buy to take. Again, why? Because every time the price hit this low, it got rejected up. So it got 1, 2, 3 rejections, 4 rejections before price went back up. So it came back down to this level. Then we can take that trade again. And then the price went back up and hit this level very close to it, then gave us a sell. This would have been another signal that we can take, and then the price would just target one of these lows over here. So this is a trade that would still be in currently, but we'd be targeting either the price to fall back down into this level right here or this level right here before we get out of that trade if we're trading against a trend. But first, continuing with the trend, guys, then we only want to be taking buy signals right now because we can see that the chart started off from the bottom left and ended up on the top right. This means that we're in a bullish scenario, guys. Pretty much this easy to look at it. When you have the right tools in place, you're using the right indicators, and you understand supply and demand on your charts, that's really all you need in order to be successful when you're trading. And again, you can trade this on any time frame and any market, so stocks, crypto, forex, whatever it is. If you guys like this video and you have any questions about this concept and how I trade personally, leave a comment down below. And if you like this video, hit that subscribe button because it helps us and motivates us to keep making videos like this in the future, so you guys can keep understanding and learning and using trading as a medium for the best financial life that you can possibly have. Other than that, guys, thank you for watching. Have a good day.